Wow, it's been an interesting week with news about unemployment, interest rates, the growth of our economy, and all of those, of course, affect our housing markets. Interestingly, after the Reserve Bank meeting, it seemed like interest rates could fall a little bit sooner, and then unemployment figures came out and changed all the narrative. So today, Dr. Andrew Wilson and I discuss these. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Last week, the Reserve Bank board met for the last time for the year, and while it didn't change the cash rate, it did change the tone of its communication to the market about rate cuts and, importantly, rate rises that now confidently seem to be off the table. The post-meeting statement highlighted that some of the upside risk to inflation appears to have been eased. The possibility of a rate hike wasn't canvassed anymore, and in fact the Reserve Bank dropped the wording not ruling anything out or in anymore. And after the Reserve Bank statement, the money market changed its tone and switched its expectations, thinking now that the first interest rate cut would occur in February next year, especially since the national accounts showed that we've been growing at 0.3% for the September quarter and 0.8% for the year. However, that all changed only a day or two later when the Australian Bureau of Statistics delivered the latest jobs report. Despite 13 interest rate rises and a slow-growing economy, unemployment fell from 4.1 to 3.9%. So what's really going on with our economy? What's going on with employment and interest rates? That's what I want to ask Australia's leading economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, in this week's Property Insider Chat. Hi, Andrew.
Yeah, good day, Michael. It was a bit of a roller coaster, wasn't it?
Yes.
From the beginning of the week, then the meeting, and then what happened after the meeting. But yeah, I've been discussing this at length in various venues over the last few days. But it was a big change. I mean, December's usually, a no action month for the Reserve Bank. Well, in our old jurisdiction, it was because the thought is, well, there's nothing much to do. Even if we made a change in interest rates. And that's why we traditionally used to see a change in November, because by the time we get to December, even if we had a change, it doesn't have much of an impact on the market because Australia's, distracted until February, So, but it was a little different this December meeting, even though, yes, it was unchanged. We've had the same official rate every month this year. So it's been steady, steady, steady. But as you said, the tone really was different. And it just shows you how just the influence of words can be so important. And, certainly the financial media and the markets picked up on the change. I guess a little bit more dovish as it's described. But we've got to look back, Michael, and remember that regardless of its commentary or general commentary, the Reserve Bank always tells us that they're not ruling anything in or out. So that's the get out of jail card in case something does come out of left field. They can say, well, we didn't rule anything in or out, either a cut or a rise, whatever. But it was remarkable because I think the process was that we did get those GDP numbers out the previous week, Michael, which was for the September quarter. They again were a little underwhelming. I believe that the RBA met with Treasury just prior to the decision. Perhaps there are concerns from Treasury in regard to economic performance. And I think the other point we've got to say is that the Reserve Bank has two agendas. It's not just controlling inflation to within its target range, and just reminding everyone that the target range is 2 to 3%. And the preferred measure for the Reserve Bank is underlying inflation. That's the trimmed mean. And that they're looking for a sustained period within the midpoint of that range. Although the wording changed a little bit in terms of that also at the meeting. And they also look at the quarterly data set, not the new monthly data set. So, but the other point is, we've really been focusing on inflation as being what the Reserve Bank's looking to control. And of course, so it should be, because we've had, over the past 2 years, we've had inflation at the highest that we've reported since the early 70s. So, yes, they had to control that, and that's why rates increased, and certainly getting back to where it would be at within or close to that preferred range, still some way off, but it's certainly closing in on that. But of course, the other agenda for the Reserve Bank is the economy in the sense of full employment. And with those low GDP numbers, of course, there was concern that there's a a shakeout in the economy, and that they perhaps have decided that maybe we need to think about stimulating the economy with lower rates rather than just what we've been doing to control inflation. So that sort of justified perhaps that change in tone from the Reserve Bank at the meeting, when it was, certainly suggesting perhaps that an interest rate cut was going to come sooner rather than later. Not in those exact words, but certainly changed its tone, and was pointing to issues in regard to the economy. And, the dollar went through the floor, of course, because that would have, had with Australia's interest rates lower, is a disincentive to invest in the Australian dollar. And then, all the smarties were talking again about a February rate cut, which I think is a little bit too close to the mark, but who knows? Don't rule anything in or out, as the Reserve Bank keeps reminding us. But and then, of course, all bets were off just 24 hours later, or 48 hours later, because we got the November labour market data from the ABS, and it was spectacular, Michael. Unabashed strength continues in the Australian economy, and and of course that would a cut in interest rate would only fuel that fire, which is a very, very strong, a very strong economy. And particularly given jobs growth and likely fueling higher incomes, that's not good news for inflation, which is still a problem when we look at particularly services prices and costs are still rising, and that reflects those issues with having an undersupplied labour market, but which sounds ridiculous because of the strength of migration. So it was a very interesting few days, Michael. So I guess when we get the February meeting, which is the next meeting, and those that have been predicting like up and down that perhaps this time we will get a February meeting, I think that will be a February rate cut. I think that will change, but we need to wait for the data for the December quarter inflation. So, would you want to be an RBA governor, Michael? Up and down? That's what do you say?
Well, I believe this week they're going to be talking about adding some extra people to the RBA board, so it'll be interesting to see what sort of background they have and if they have any better understanding of how to manage the economy. So interest rates, we're just going to have to wait and see. What about the jobless figures? Let's have a quick talk about those because they were really very low. A lot of people were expecting unemployment to creep up. In fact, that's what the Reserve Bank was hoping too.
That's right. It would have validated their position, their changing position, shall we say, their moderating position. But we had a really big result for the labour market. The unemployment rate fell back under 4%, 3.9%, Michael. And that's exactly the same as we had over November last year. So the unemployment rate over the year has remained under 4%,
And a lot
3.9%.
of them were full-time jobs too, Andrew.
That's right. And this is the other point that we started to see perhaps, and there were some early signs in the October data that maybe we're starting to peak in terms of what's been a very strong labour market. And that's not surprising. It's called a cycle for a reason, the business cycle, but and with those lower GDP numbers. But we've really got to take those measurements of GDP with a grain of salt, Michael. A lot of the underperformance of the GDP does come from the balance of trade. We've had some issues with the cost and the volumes of iron ore and coal in respect to the Chinese economy, and that's impacted our GDP. And even the ABS was saying that they're going to start thinking about how they measure GDP. There's always been some concerns that it's not really, totally relevant to the health of the economy, and that's why we focus here more on what you might call real statistics, and that's unemployment, retail sales, which shows what's happening in a sense on the ground.
Just to
wage
make it clear for
changes.
those who don't understand, GDP or gross domestic product it's a monetary measure of the total value of all the goods
Yeah.
and services produced by a country uh, over a specific period of time, often quarterly. So it's often used as a de facto measure of the economic health of a country, isn't it, Andrew? But I guess what you're saying is maybe it's not a good indication of how the economy's actually going. It's only one indication.
Well, that's right, and what impacts consumers on the ground are scenarios, particularly the labour market. Because if we have falling GDP and rising unemployment, then okay, that sort of correlates. But we've got low GDP, but we've got a booming economy in terms of the labour market. And as I was saying before, Michael, we did start to see over the past couple of months, perhaps a change, not just in a higher unemployment number, which had just ticked up a little bit to 4.1%, but also a sense that the job creation, which has been spectacular over the last couple of years, last year particularly, hundreds of thousands of jobs being created, despite all that, the regeneration of migration after borders had opened up again. But we saw another big number of jobs increase over the month, Michael, up by 36,000, which was well ahead of the 16,000 rise the previous month, which was one of the lowest increases we've had for a while, but still 36,000 over November was a significant uptick in the number of jobs created. And the other thing was we actually saw a big fall in the number of unemployed, down by 27,000. And that followed, as I said, a rise in the unemployed the previous month, which was giving us these signs that perhaps we were starting to peak the labour market. But no such sign there. It's strengthening on these numbers. Participation rates still at near record high levels. So this is, not only we reducing the number of unemployed, we're increasing the number of employed. We're also doing it from the highest proportion of our potential workforce just about ever, Michael. So it just really doesn't get better than this. And as I said, it certainly changed, or as we've said, it certainly changed the perceptions in terms of a change to interest rates earlier next year, a cut. Which I think now we're back to where we were. We've gone 360 degrees, 180 degrees, or whatever. Since prior to the meeting, with all this data, sort of coming this way and that. It's an interesting, almost a conundrum for the government, of course, because it will face the electors next year. And it would dearly love, I would suggest, a cut in interest rates. But, I'm not sure it wouldn't want to have that happen with a higher unemployment rate. So interesting times ahead for us, Michael.
Well, your chart here now shows that unemployment has varied from state to state. That's not surprising. Western Australia's got the lowest unemployment figures around Australia.
Yeah, and it really hasn't moved over the past year either. 3.6% Western Australia, 3.7% over November last year. And these are all, very healthy numbers. We've gone back prior to COVID, Michael. We would have thought these were remarkable numbers.
Yes.
But and they are, and even Victoria as the underperformer at 4.4%. That's a very positive number of unemployed. And the interesting thing when we look at jobs creation, Victoria and Queensland have really been motoring ahead in terms of job creation. And so it's not just the unemployment rate that's important to look at as a statistic, also the number of jobs that have been created. And it was, it's been a positive period for Victoria as well as all the other states in terms of job creation. But Victoria is one of the leaders of job creation. So, it's an unequivocally strong economy in terms of the labour market and strengthened over November, which was a bit of a surprise to many.
Right. Well, we just touched on the GDP. Maybe we could just have another quick talk about that
Yeah.
because that came in a short while ago, and it was a bit lower than people expected. And people said, "Aha! Look, we've
Yes.
got this per capita recession going on for 7 quarters now."
Yeah, but we've sort of gone through this. The per capita recession hasn't had much of an effect on the labour market, has it, Michael?
No.
So if it's bad news, I'm not sure where it's bad news. But of course, the reason we have a per capita recession is because we've had, the best part of 1 million people come into Australia over the last 2 years as a result of opening up our borders. So of course, we're going to have a lower GDP per capita because we've got so many more people coming into our country to divide the pie up into, if you understand what I mean. But looking at the nominal GDP numbers, it's been I guess a low grind through the post-COVID period once the stimulus packages worked through. But as I said, there are contingencies in that, particularly our trade position, which has deteriorated in terms of our relationship with our exports of resources, iron ore and coal, where prices have fallen. And the volumes also have fallen. That's because reduced demand from China, as we know, has been certainly having a poorer time in its economy recently than we've experienced over the last few years, which has been to the benefit of Australia's exports, resource exports. And so we're a little bit at the other end of the pineapple at the moment in regard to that. And that has impacted GDP. But GDP, really the growth in GDP was from government spending, Michael. So, as I
As
said,
was a lot of the employment too, Andrew.
yeah, that's right. And as I said, it's a measure, and at those sort of low levels, and yet we have a very strong labour market. It's a little counterintuitive as to
Isn't it?
what GDP actually means. And as I said, the ABC the ABS is starting to consider some other measures of GDP.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do? We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, it was the last big auction weekend, the last Saturday, with a number of properties coming onto the market over the weekend, falling a little bit, not surprising as the steam's coming out of the market. How did the last auction weekend for the year finish off?
Well, yes, the last auction weekend. We'll probably still have some reasonable numbers through the week this week, Michael. We'll put together a report just to see what it reflects in terms of the market. But we certainly will have lower numbers. We're only just over a week outside of Christmas, the Christmas break, the main holiday break. And of course, the consumers are significantly distracted as a result of that. But it was, yes, of course, lower numbers as we come to the end of the year. Clearance rates overall not too bad, a little lower really in most capitals, but still holding up. But I think the interesting thing, and we look at the numbers specifically, 979 auctions over the week in Sydney, well down on 1169 the previous week, and the same week last year, similar but still higher, 925 versus 979. Melbourne auctions similarly down sharply over the week, 1190. I didn't mention Sydney had a 61.7% clearance rate, not too far away from the previous week, and a little bit lower than the 66.2 over the same week last year. But the Sydney market certainly, heading for the holiday mode. Melbourne has been actually remarkably consistent. Melbourne, Michael, we've seen that it's been consistent for around about 6 months in those mid 60s. It's certainly underperformed compared to the higher clearance rates over that period in other markets, but it certainly hasn't deteriorated, we could say, through the auction markets of spring. But auction numbers down and still higher than where they were a year ago. But the auction clearance rate, Michael, in Melbourne was very similar to where it was the same period last year. Brisbane's, back to the sort of the Brisbane we expect with those 40 to 50% clearance rates. Still a strong market in Brisbane. As we've reported recently, home prices are still rising quite strongly in Brisbane. And auction numbers were well down over the week compared to the previous week. Adelaide's probably been the market where we could really see there's been a shift in the underlying trend of activity for buyers and sellers in Adelaide. Again, their numbers were down 189 auctions, but their clearance rate 61.6%. Not really that far away from a year ago, but we were used to seeing those 80% clearance rates consistently in Adelaide for most of the year. So it's certainly becoming a bit more balanced between buyers and sellers. And Canberra, up and down as usual, back down to under 50% following a 60% plus clearance rate the week before. And when we look at the trends, Michael, I think it's very interesting to see the monthly clearance rates to date over the past 12 months. Sydney a little lower than where it was a year ago, but not too far below. Melbourne almost identical to where it was a year ago, Michael, in terms of clearance rates, and it's really been spectacularly consistent, the Melbourne market this year. A little lower than many would hope, but certainly consistent. Melbourne, Brisbane's fallen away, and again, it's similar to where it was a year ago. The Brisbane clearance rate, the Brisbane auction market. Same story for Adelaide, a little lower than where it was a year ago, and Canberra also a little lower than where it was a year ago. So we'll see how we go this week for numbers. And there'll likely be very few weekend auctions, Michael, but still auctions happening during the week. So we'll see how that translates into activity. But in reality, we're really now waiting until February for the market to resume. And it'll be interesting because will we be talking about a Reserve Bank decision to cut rates then? Because we'll certainly have the the December quarter inflation data to analyze in terms of that RBA decision. But of course, a lower interest rate can only refuel housing markets. It improves affordability. It raises confidence, and particularly with a lower interest rate with a booming economy, as per our labour market, could only be a positive for consumers, Michael. Only a positive.
Well, we're finishing off the year better than we started. It's been a year of many mixed messages and some surprises. I think we're going to start the year again with lots of different predictions. I'm going to make one prediction to finish off today's show. Most of those are going to be wrong once again. And that's unfortunately the problem with these forecasts and predictions. But we'll be getting back together every week next year again to report on how the economy, our housing markets and the auction markets are going. Thanks, Andrew.
Yeah, and just to finish, Michael, it's been an interesting year because basically at the top level, nothing's changed over the year. We've consolidated in 24 what we had in 23, same growth in the national market. Yes, there's been, as usual, some top performers that have pulled us up, the big three, Brisbane, Adelaide and Perth. And some have underperformed a little bit, Melbourne, but does that mean Melbourne is a land of opportunity? Perhaps it does. And Sydney's been solid as usual. And Michael, just a tip before we do a real preview, I don't think much will change next year either, to be quite honest, particularly if we get an interest rate cut.
Well, yes, once the interest rate cut comes, the market will perk up again, won't it? Thanks for your time, Andrew.
Thanks, Michael.